Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody, let's take a look at the gold market. Well, in the medium-term perspective, on the weekly chart, on the monthly chart, gold market stands at a very significant point. Because if you usually read our updates, you probably know, guys, that this action to the upside was a reaction on the hitting of the minor ABCD target on the weekly chart. So that is the 618 extension of the ABCD pattern, and that was a reaction on the reaching of the minor target on the weekly chart. And currently the 1335 area, in fact, the ultimate level for this possible retracement is a respect on this target. Because usually when the market hits the minor targets of the ABCD, it either shows no retracement at all, or retracement usually small, somewhere around 3 retracement, maybe 15. The maximum acceptable retracement level is the 618, is the 1335 area. And depending on what market will show at this top, in fact this will determine and will clarify the further direction. Because if market will hold above this area and will continue move higher, this probably will lead to the further down upward action. But if market will fail here and turn to the downside, this will tell us that the bearish ABCD pattern and even butterfly on the weekly chart are still valid, and we could count on deeper action. Although these targets really are significant and really extended on the monthly chart, but this will also put the direction for shorter time frame, for the daily also. And in the nearest future, guys, we probably will have to estimate the direction. So what to expect? Whether this just retracement from this leg and market will continue move higher, or that is retracement from this leg and market will show ABCD down. And currently, if you will take a look at the gold market on different time frames, you will see just nested ABCD patterns, the smaller and smaller on different time frames that point in different directions, and in general situation is really very blur on the gold market. But currently, guys, I see 3 points that at my taste looks valuable and worth of our attention, that point on that skew chances in favor of downward action. First of all, market has failed to hold above 1335. If we suggest that market stands with the ABCD pattern to the upside, and that is the minor target, 618 target, it hasn't reached it and wasn't able to hold above this minor resistance. Just reach this area and plunge down. This is very important if we understand that this level, in fact, the final level for possible retracement up from this leg, that is acceptable to keep bearish context on the weekly chart valid. That's the first point. The second point, take a look that during this bounce to the upside, market has not retested this area. It has stopped at 1325, some 618 resistance of from this minor leg down, but it has not challenged again and again this resistance. That is usual for thrusting markets, for a market that intends to continue move high and that gravitates to some targets. But that hasn't happened. Market even has not retested this area. Third moment is this reaction. At the first glance, it looks as bullish because market has hit the monthly pivot and moves up, and that probably you could say that this confirms the bullish sentiment on the monthly chart. Well, maybe this is true, but usually when the market retests this monthly pivot point, as I said, it should continue move higher, but this hasn't happened. And I suppose that this reaction was mostly on the oversold condition. Besides, 1325 area is the target of the Jordan stretch pattern, and this is the equilibrium between oversold and overbought area. That's very typical for the stretch pattern that leads price right to the equilibrium, but not far. And that has happened. So that could be the reaction mostly on the 50% support at oversold stretch pattern. And finally, maybe this is most significant factor, that action above 1350 1320 area wasn't supported by real volumes, real purchases on the physical market. The investors do not hurry to put money into gold, and the new inflow is the guarantee of any upward trend. If nobody buys, market has no foundation to continue move higher. And if you'll take a look at the recent safety C data, you'll see that on the recent week open interest, it hasn't fell, and net position hasn't changed much, but previously we saw the increasing of the net long position, but open interest shows the flat action and even decreased, and that can't encourage us on the expectation of the possible further upward action until we will not see the changing the situation on the physical commodity, on the physical gold market. That's why, guys, I think that in general the downward action here is more probable than the upward continuation, significant upward continuation, until the 30th of July, when the Fed meeting will happen. But this action to the downside could happen differently. So here we have estimated that this could be, for example, A, B, C, top, D pattern. Now let's shift to the 4-hour chart. On the 4-hour chart, we could get this minor ABCD pattern, but it could develop differently. Also, take a look that the target of this pattern coincides with the monthly weekly pivot support one right here, and if market will reach it, probably this will be very close to the daily oversold again if this market, if this action will happen very fast. But this action to the downside could happen also differently. Recall what I said about the nested ABCD patterns. Here, guys, our task in the beginning of the week, the first stage of our trading plan, will be to estimate whether this ABCD pattern already has started, or we will get first ABCD to the upside, and we will get Gartley's triple to sell before downward continuation. Because if we take a look at the hourly chart, you'll see that this ABCD pattern could appear and its target coincides with the weekly pivot resistance one, and we know that there is nothing drastic with it, no problem, because if even the market will reach this area, that will not break the overall bearish situation that we have discussed on the daily chart, on the 4-hour time frame chart, because that will be a retracement. That will be weekly pivot resistance one, and we know that until weekly pivot resistance one holds the upward retracement, we could say that previous bearish trend still valid. So that will not change drastically the situation, the context, but this could adjust the starting point of the downward action. That's why our first stage in our trading plan will be watching for two moments in the beginning of the week, on Monday and Tuesday. First is there action around weekly pivot point. We need to see that market will fail here and turn to the downside. That's significant. Second, we need to watch for this low, the low of the thrusting candle. If market will vanish this candle and taken out of these lows and test weekly pivot point, move down, that will be the real signs that probably that this ABC pattern already has started, and we will be ready for downward action with this ABCD pattern on the 4-hour time frame chart. And later, when we will finish with this one, we could think about this greater ABCD pattern, depending on what situation will appear there and what will happen within the 3 days on the next week.